Okay, I'm gonna leave my.
All right, everyone, welcome again to another Sunday night charting session. So just like always, the first few tickers we go through, I'm going to do the usual of explaining more in detail on how I chart, why I chart, and basically give a more in-depth breakdown. As we go through this, I'm going to be more, I don't want to say quick with it, but I don't want to take my time because we do have, I think, 31 tickers, 29 around there, and we only have about an hour. So I'm going to try and put about 3 to 4 minutes per ticker. We may go over the limit like we usually do with every class. Obviously, I like to talk, as you guys know, but as we do this, ask questions. Any question you guys have, just let me know. I'm going to look back every few minutes to look at the Zoom chat on the TV behind me. But I'm just going to basically start with the first 2 to 3 tickers, be more in depth, show you how I look for main levels. Luckily, the main tickers we'll be looking at are like Apple and Amazon. So they're one's at all-time highs, pulling back. One has had a huge continuation. So I'll be able to like break down different areas where stocks are at for the first few that I'll be in depth with. All right, so starting off with Apple, the first thing I do, which I know a lot of you know where Apple's sitting, you understand it's basically at all-time highs, contesting, dropping down with a higher low as the trends still hold. I always start on the weekly, the daily. If I have to, I'll go to the monthly. I just want to like see the bigger picture. Where's the stock sitting compared to all the historical candles, all the historical zones, all of this stuff back here that I currently have highlighted. None of this matters until we break down in the current timeframes for price action. So you don't need to worry about the previous all-time high around $181 until we break back down $10 a share in the current price action. So that's why I go in the major timeframes first for stocks I may not be familiar with. It gives me a bigger picture, and then I'm not faked out on a zone that could be close to happening in the current price action that may have happened back in, say, 2021, 2022. Every level, every zone, it repeats. Everything has a reason. They all come back into play. It's not like if we drop on Apple back to the initial all-time high around 181, we're just going to flush through. Buyers are going to step in. Logically, they're going to step in. Since that was a heavy resistance back in the day when it hit all-time high, that's going to act as a massive support if we do drop back to that level at some point. So I like to have the bigger picture to understand where main levels are, where heavy price action will be into effect. So since we understand where Apple is, I take it down now, maybe the daily, the 4-hour, the 2-hour. Since I already understand, I don't need the daily for Apple. We just have to look at the closer picture with everything. The only stuff that matters is the last month or two of what the stock's been doing. So I take it down to the 2-hour, the 1-hour, and I find levels within the more smaller timeframes compared to the daily and the weekly. When focusing on Apple, the biggest thing I like to use for my personal charting, I love to look at trends, higher lows, higher highs. Is the stock being respectful of the price action as these trends are forming, as they reject, as they bounce? Looking at the 2-hour, just going off the trend that I personally have, we're right at that logical support bounce. Outside of using the trends, what other confirmation can we find with Apple that will give us that reasoning? We understand that every time Apple comes down to the trend that we have, if we take this trend away, you put one in based off price action. It's not just like, oh, it's there, it has to work. There's a reason for patterns. There's a reason for support resistance. There's a reason for trends. It's all based off the candle formations, which are the algos, the buying and selling pressure, price action. Use that to your advantage. So us understanding on the 2-hour, logically in this area, it may not be a dead on bounce at the trend, but around here, we may find a support zone on Apple. Taking it down to the smaller frames now, the 30-minute, the 15, where in these areas can we find an actual zone that may present buying pressure? The first thing I noticed, Apple had multiple days of resistance right here. For almost 4 days until the actual 4th day breakout, we kept rejecting around the same level. Notice how that level correlates with that trend line that we have. We're currently at the zone where this purple highlight is, where we logically and historically should bounce because that was historically a resistance. As we approach that level, that's when you start watching it more close. Could Apple barely not pull back to that 191 a share area. It could curl off Monday. We could gap up overnight, and we could just open up on Apple at 193. It's the idea of preparation, the patience to wait for the stock to form how it does. So for me, going off what I use, I would look for a nice support bounce with the historical data of this price action around 191 a share if Apple dips down to that level. And I'll change that color to a bluish. So going off the upside now, obviously, if we break below 191, I'll be focused on levels below. This little gap we had in between, back on Apple, about 4 days in a row. We were just up, down, same resistance, back down the same support. Back up the same resistance, back down the same support. This is going to be a zone if Apple breaks that 191, 189 area, 189 to 190 a share. That could be one of those 4-hour wicks that pop back to finish green on the day. So you don't want to get faked out on the 5-minute thinking Apple's going to flush. We have heavy support approaching if we drop to 191 to 190 a share. Going off the upside on Apple, we're using the past few days or even weeks before to find a zone that has heavy rejection. So this highlight I just put on Apple, historically, we rejected that a few times after breaking out of that higher high trend. We pulled back under. Around that area, with the shares being roughly 192.6 to 192.8 zone, that is going to act as a resistance for Apple as we push. If we break above that level, and I'm going to take this down to the 5-minute just for a bigger picture with candlesticks. If we break above that 192.6 to 192.8, we've held support there before. You guys can see that right now on my screen. We pull back underneath slightly in that zone, we push up. We pull back again, we push up. We pull back again, we push up. That has held. So now that we're underneath, it's going to act as a resistance until we show price action of buying pressure to push it back above that zone. In that instant, for me personally, I'd want to see a break above and a recontest to that level to hold support. At that point, that's when I personally get calls for that bounce probability. I don't like breakouts because sometimes they can fake you out. A break underneath this level could have been like, oh, I got to get puts before it's too late. It's a fake out drop just to send it right back up. So don't let the smaller frames trick you. Focus on the bigger picture and what you have to wait for and put your patience into. And Chris just said Apple weekly shooting star candle looks nasty, sell off up to earnings. Apple does have earnings, not this week, but the following week. So as you guys know, earnings always plays into effect. Pre-earnings run up just a flush. We have major earnings for tech this week, Microsoft, Google, Amazon, Shopify, whatever you want to look at for that personal week. Apple is approaching the following week. We also have FOMC this Wednesday. So a lot of volatile news will be coming out. For Apple, just to recap real quick, main support I'd be watching, and by main, I mean if this breaks, go bearish. The main support is around that 190 a share. The actual level I have is 189.78, but 190, 189.5, in between those two levels will be the massive support. The support to watch if we do have a slight dip around 191 a share. I want to see a break and hold above 192.6 area to show a push on Apple after the slight pullback Wednesday, Thursday, and Friday of last week. So going on to the next stock, and I'm going to be going in alphabetical order. So if you are waiting for like Tesla, it's going to be at the very end, you guys, so I apologize. Looking at Airbnb now, I'm going off what you guys said on Discord, the section we have for you to post your tickers. I'm just going in order, alphabetical order, not what you posted in. So looking at Airbnb, the same system. I want to look at the weekly real quick. I just want to get a good overview as to where it's sitting on the bigger picture. So looking at the weekly, we broke out of a massive wick we had historically. We're currently above that. So I just want to move a level to that wick because we rejected there for a purpose. It's not like, oh, we hit that level, we dropped, whatever, like whatever, just a random tap out. That is going to be a pullback level. Using other candles on the weekly, if we pull back to, filled candles and wicks around that zone showed support as we were above that price action. So we can use that as we dive slower down into the smaller time frames. On the daily, we don't have much more to work with, so I got to take it down even more. We have a major level already around 144.6 area, 145 a share. Going down to the 4-hour. This is when, for me, it gets kind of tricky because a lot of the price action is historical. You may have to swipe back to where other levels were present, since in the current price action, Airbnb is basically at a quote-unquote breakout level. It's going to have continuation. Historically, there's going to be levels that approach. So just going off a quick eye from what I see, we had a nice bounce around here for support, nice wick down. After we dropped below, notice how we tried to break back to the upside here and rejected. So this zone, which I'll change the color to orange. Well, no, let's go yellow so it stands out better. This yellow zone, not a precise 151.15, but anywhere in this area where this yellow line is, it acts as a precise zone. If the price action is underneath and it's pushing up towards it, it acts as a resistance. If we're above that price action and it pulls back down, it acts as a support. So I like to use that stuff for confirmation and current price action, knowing that historically it plays a role with a support or resistance as it recontests on the upside or downside. Notice how these candles aren't just fluctuating right to it for no reason. Some of them are almost dead on, but it's the zone idea. Anywhere in this area, 150.50 to 151 a share, or 151 to 152 a share. Anywhere in this zone, we're going to have consolidation, maybe a lot of just chop. Understand how candles work with specific price action per share. So using that as we move forward, that is going to be my gap. I understand there's levels in between. I'm a gap fill trader. I like to look for where the main points are. You can obviously, if you take this down to the 30-minute and come back more, put a level in the middle here, put a level at the top here. I don't want too much commotion. I understand 145 a share to 151 is a $6 push. That's kind of a big gap, but we've seen Airbnb move in that length of time historically within 1 to 2 days, maybe a week. So we understand this move is not going to be too big. We're currently in the zone of it. When I move back to the current price action, taking this down to the 30-minute, these are the two zones I'm focused on. Now I use a smaller picture to find zones within the 151 as resistance and the 145 a share area as a support. I put more levels in now. No one in the middle, we rejected almost 3 days back to back around 147.5 a share. If we pull back and drop under that, for me personally, I'm looking for a call dip buy in the zone roughly around 145 a share. That's personally how I use my patience, and I wait for the main levels. I understand you can buy calls at 147.5 dip and hold in this area for a possible pushback to the upside. I get that. I like to be patient with it. The way I look at the bigger picture with the yellow highlight on top and the orange on the bottom, this is the gap that Airbnb is currently in from what I just charted. Yes, there's more levels in between, but I like the main like 5, 6, 7 bounces of rejects historically that I can use in current price action. It's more of a reliable source to use than just every $2 in between, every 50 cents in between. Knowing that this is like the main gap, almost a $6 gap, I don't want to risk calls or puts in the middle because it's kind of like a 50-50 decision. So I would wait to see if we pull back where we have already and held support. This is the zone I would look for that I have in blue highlight for a call bounce. And obviously, if we break above the 151 and hold support, that's when you can buy calls if we don't have a dip. But if we reject or show resistance, show some selling pressure around 151 a share, you can watch for a reject back to fill the gap to the downside. That is when you have to focus on, is my risk worth it? Should I buy puts here? Is it worth it to just wait and see how it reacts in a few days from now or a few hours? That's when personal bias and personal thoughts come into your entry points. So for me, main support I see is roughly 145 a share, main resistance around 151 a share, and then the kind of in the smaller frames could be indecisive, roughly 147.5 a share. So at this point, we're moving on to AI. I'm going to be a little bit less in depth on why I'm putting levels. I'm already 17 minutes in. We have almost 25 plus stocks to go through. So if we get through all this and you guys have questions, we can go back if we have time, but I don't want to take too much than just an hour of your guys' time tonight. So going off of AI now, you guys are just listening. That's perfect. So using the chart for AI, a lot of people love to see AI charted. It's the hype right now, artificial intelligence. We're still looking at that $34 a share, $35 a share dip buy. We're currently curling back to the downside. We have a main support area around here from the last time we dipped and pushed. That zone, if we hold support there, is going to be roughly $37 a share. If we fail $37 a share, we should fill the gap roughly down to $35 a share as a support. If we push back to the upside, notice the double top we just had, which is roughly around $42 a share, 42.2 a share. That's going to be the main rejection. And if we do break out of that, I expect us to fill the gap roughly to $48 to $49 a share, almost a $7 push to the upside. Moving on to AMC now. I already know you guys mentioned this because the news after hours Friday, it pumped up massive. This, you have to go to the weekly and the daily. You can't chart this on the smaller frames. Just to get the level on the larger picture, since you can't see pre-market and after hours on the daily or weekly, I'm going to put a level at the high and after hours on the 4 hour, which is roughly 8.8 a share. So now we have that level to use as we go back and look at historical price action. Starting with the weekly. The tap out after hours was almost right on the neck of the previous push we had with AMC back on March 3rd of 2023. So understanding we've had pushes before, we've pulled back before. Do you want to join the hype of, I got to get in before it's too late? This could be like the next craze from AMC I missed last time. A lot of these pushes may not hold. Yes, the news was good. Take that into consideration though. All levels are basically invalid outside of we've seen resistance around 8.8 a share twice now on AMC since we've had the drop under that level of almost $9 a share. Understand it's a patience game now. If we pull back on AMC, the main support I would like to see hold is around this area I have highlighted in white. And that's roughly going to be around $7 a share, $7.20. It's almost a $1 drop. And obviously I know after hours, the actual level that we closed was around that level of 7.1, $7.20 a share. So how is they going to open tomorrow? I don't want to get too deep in the AMC because it's all hype right now. The news pushed it. People have to react and readjust the volume of buyers or sellers. This is going to be a Monday open decision for whoever wants to play this. For me, I don't like hype on stuff like this, but just watch that 8.8, that pre-market, the after hours high we had based off the news. If we break 8.8, I'll give you guys a level just in case you're like, well, how high can this go? Just going off candlesticks on the daily, we are going to see a rejection if we fill the gap to roughly $10.80 a share roughly. So almost a $2 push of that 8.8 break to the upside. Outside of that, it's a lot of chop in between. Watch the dip buy and hold at the $7.10, $7.20. If we break that level on the downside for AMC, focus on the historical supports we tried to hold when we pulled back around this area. Realize where price action will be, and that's roughly almost $6.10 a share around that area. So we have the support that has to hold it open, roughly $7.10 a share. The main support, if we fail that level and sell off, there should be a nice buying zone around $6.10 a share. If we push upside, obviously the after hour high of about $8.80 will be a reject. If we break out, watch that $10.80 fill on the gap. A lot of chop could happen on the way up, that $2 push. But if a short squeeze does happen, shorts cover, people start buying shares out of, I got to get in before it's too late. This could make a move. I'm not saying up above $10, but it could push to $9.50 before it has that short put back into it. Just be cautious. Moving over to AMD now. I'm going to start on the weekly just to see real quick exactly where it's sitting. So we're still trying to break up to all-time highs. Going down to the daily now. We haven't filled that gap down to this trend line I have, for me personally. A lot of people say, well, how do you react with stuff that breaks under like this? You don't want to just chart the bottom of the candles. You want the most candles filled in that situation. Notice all the candles touching. Yes, we have wicks under. That's natural. More candles touching here. Fluctuated under, but buyers kept it higher. Once we broke above, notice where that candle pulled back on this orange highlight that I have right here. We have wicks historically that held support. Once we broke above that level, same zone held support with those wicks. So we know this level is going to be heavy if we fail out of this possible rising higher lows on trend. Going down to the 4 hour now, taking AMD down to a smaller picture in the moment with it. Going off historicals, I'm going to move this white highlight down just so it's in the actual frame I'm talking about. Watch that $109 a share, $110 a share area. We've rejected it, finally bought up with the buying pressure. Once we came back down, we've wicked under it a few times. But focus on where the wicks have been on the 4 hour. All the selling bought back up, sellers bought back up, sellers bought back up. We could flash underneath that level of around $109 a share, maybe touch 108, 107. But that's what the trend's going to want to happen. people watching this on the smaller frames, if I'm on the 15 right here, they're going to see a bear flag, possible breakdown. I got to get puts before it's too late. Not realizing the bigger picture could be a nice dip buy opportunity for AMD. So just like I tell you guys, be patient. This is going to be a watching one. Understand the process of if we dip, we have a nice zone. It's not very precise to the decimal, but anywhere between about $105 a share to $106 a share, there's going to be buyers stepping in. And that aligns pretty well with this trend line if it does pull back to that area. Buy time on this position if you want calls on this dip. If we do push upside, the same levels we talked about last week are still valid. Roughly $118 a share is the first resistance. Next level will be roughly $120 a share if we do push to the upside. So moving over to Amazon now. I have a lot of stuff going on with Amazon because I do watch this every day. I'm going to start on the weekly just for the ones that may not know where it's at. Amazon's been trying to fill this main gap to the upside. I'm actually going to delete all my levels just to restart all this for you guys live right now. So going to the daily time frame on Amazon. The main gap I still want to see get filled is this cup and handle on the top that we're slowly forming. We're making a bullish transaction after, or a bullish move as we started that bear after that tap out. We caught the bottom, started curl. Now we're making higher lows in the moment. So we understand Amazon, yes, it's still bullish on the bigger picture. A lot of people, if they're on the 5-minute to 10-minute, we had a sell-off on the last 2 days for Amazon, Thursday and Friday. They think there's going to be a pullback. They got to get in before it's too late. You have to understand, just like with everything, we have support that will hold this up. We have zones underneath that have acted as a massive resistance that then switched to a massive support. We're pulling back to that right now. So I'm not saying Amazon's weak, Amazon's bullish. Everything's 50-50. Everything is indecisive. You're not guaranteed to win every time. So you have to use levels, use price action, use your indicators, whatever you use for your advantage. Be cautious and know what you're getting into. I've always had a level at roughly 127.5, $127.50 area. That's a massive zone for Amazon. Historical resistance turned to a historical support, which is now going to recontest as a support zone. Outside of the 127, the one just under that for the zone we had historically on Amazon here. You have to understand these zones will play out again. Historically, this rejected. Once it broke above, it held as support. If we break that 127 area, we're going to have support around that 124 to 125 a share on Amazon. It's going to act as another support. If that level breaks, that's when we're going to have that flush. That's when Amazon could pull back to 120, possibly even 115 to 105. That's a massive pullback. I get it, but that's when it comes into play. Until then, we have massive supports that we cannot ignore. Now looking at the upside for Amazon, I would love to see the gap fill. It has earnings on Thursday after hours. I truly think Amazon has potential to reach that 140 a share, maybe from the earnings report, maybe before earnings push. Earnings is going to determine everything. Tech has been kind of weak with the earning reports so far. We have Microsoft and Google on Tuesday. That could play into effect for kind of like speculation, what could happen with Amazon. For me personally, I'm only watching to see if supports can hold. I'm not really interested in seeing resistance right now, since we do have almost a $6 to $7 push before the previous reject we had to break on the upside. So main support for the main first level, roughly 127.5 a share. If that breaks, I'm watching the gap fill to around 124 to 125 a share on Amazon. So moving over to Boeing now. And these are going to be a lot more quicker as I run through these. Boeing's trying to hold off these higher lows of the trends. So a pullback to roughly $210 a share will align with historical rejections, which is now acting as a support zone. Rejected about twice, tried to hold with chop. Once we broke above, we were holding this zone on pullbacks as support. So if we do have a pullback on Boeing, I would be watching roughly $210 a share, maybe $209 a share. Anywhere in that zone should act as a support. If we push upside, same situation as the support. Massive rejects roughly between almost $218 to $220 a share. It's not a pinpoint, but if you want a more precise level, use $220 a share as a reject for Boeing. So main support I see is roughly 209 to 210. If we flush through that, watch the 203 level. It's going to be a gap fill from the previous higher low that was forming. For the resistance reject, roughly $220 a share for Boeing. My bad, guys. I'm just looking at your questions. So AMC looks good. 610. Yeah, 610 for AMC is going to be like the main support contest if we get that. Do you think 131 can act as a short-term resistance if we can hold support around 126, 127? I do think 131 will be a resistance on Amazon. The 127.5, I am very heavy on for a support. If we bounce off 127.5 around that 130.5 to 131, that is going to be the first level of resistance. I'm going to go back to Amazon real quick just to show this. That 131.50 to 132, that is the zone, just like Amazon before with 124 to the 127.5. So we have two zones basically. I'm going to make this very quick with visual. We got this zone from Amazon, chop, up, down, broke out finally, made a new resistance with the same support that was a historical resistance. Now it's back to up, down. So if we bounce off 127.5, 131 area, 131.5, that is the first reject level. Notice the bounce that happened on a quick dip back on July 18th. This zone is valid for resistance. So looking at BABA, this one, it's very short and sweet, not much to talk about here. Larger picture is not very heavy right now based off the wicks we see on the 4 hour, the 2 hour, whichever time frame you're on. We've had resistance every time we push up to the zone at roughly 94.5 to $95 a share. Going outside of that, we are holding a massive support level in the smaller time frames. We've been holding that 91 for almost historically resistance back on July 7th. Once it broke above, we're kind of flashing underneath, push back up, drop back down, push back up until we break and hold under this highlight I just put in, which is roughly 91.7 area, $92 a share area, 91.5. Anywhere in that zone is going to be a massive support for BABA. Until we break under and hold that level as a resistance on pushes back up to it, BABA is in a massive bullish transition right now. There's a huge chance that BABA could fill the gap and potentially break out to this gap fill on the upside, roughly at $98 a share, almost a $7 to $8 push if we can hold 91.4 area for the upside continuation. Along the way of the upside, we're going to have 94.5 as a massive resistance. And then obviously the gap filled to roughly $98 a share. So moving on to Best Buy. I have not looked at this very often, so I'm on the weekly, just get for my personal overview as to where it's sitting right now. And we're kind of at a nice rejection zone that we tried to hold back in April 8th of 2022. I'm going to take this down to the daily first to see what's going on. We're trying to curl here. Had a nice handle on this cup that's trying to break on the upside now. Here's the handle on the cup that we kind of had right here. So we're trying to break out of this formation now. Trying to hold, trying to break that $84 share if we can push back up to it. If we do break above 84 a share, I would not be surprised. And it looks like Best Buy moves a little slow, a few dollars a day, if not even that much. We're going to have a reject around $87 a share, 87.2 area. So realizing the zones we're at, if we can't hold or break above $84 a share, a lot of chop has already happened historically. We have a nice bounce area that could potentially take place that we're currently zoning in between at that 82.5 a share. It's acted as a resistance historically, and now it's trying to hold it as support. So I haven't traded Best Buy before. I don't plan on it, but just going off the levels I have, I would like to see it hold 82.5 as a support. If we can break out of $84 a share on the upside, it looks like continuation could happen. 85 will be a nice little reject area, but 87 a share does look possible for Best Buy. So now I am pulling up Coinbase. I'm sure everyone's been watching this crypto news with the XRP. The biggest thing that I'm going to talk about, I'm going to start on the daily time frame. I just saw someone type a question. Oh, I did not actually. Never mind. Perfect. So the main support after we had a resistance for Coinbase, this yellow highlight, $85.50 a share area. That's about a $15 pullback from where we currently are. I'm not saying it's going to happen, but that's the only main support I see if we cannot hold above 102 a share if we push this upcoming week. Going off this bull flag that we're currently starting to break down on, if you want to raise up this level to roughly $91 to $92 a share, you can. But I'm focused on the main fill to around $85 a share on the pullback. For coin to stay bullish, we need to break and hold that 102 to 103 a share to show continuation. That is the current gap and consolidation that's been going on with support and resistance on Coinbase. If we break above 102 to 103, we're going to fill the gap to roughly 110 to 111 a share. At that point, if it does break out, which I assume selling pressure is going to hit this week, I'm not speculating or anything like that, but just the idea of a massive move off news that had nothing to do with Coinbase, but crypto as a whole, a sell-off could come. I'm not saying to 85 a share, but maybe 91, 95. Be cautious with calls until you have reasoning to buy into Coinbase. Moving on to Costco now. Just like always, I'm going to start on the daily for the ones that may not know where it's sitting. We finally broke out of these lower highs and higher lows of this squeezing wedge that broke to the upside. At this point, I'm not going to say we're in no man's land, but I love to use historical levels on these lower highs, higher lows as support and resistance as it moves. We're currently approaching this $561 share area on Costco from this level right here, from that lower high forming. Using other levels within that, we've rejected that before, back in late 2021, early 2022 area. So this level has had massive rejects on the daily, and also when it tried to break out on the upside multiple times again. Once it broke underneath, it couldn't break up because a massive resistance zone was in that area. So we know around 561 a share, 562, we have a price action differential. Sellers, buyers, they're fighting for a position to make that level happen in whichever favor it goes. So going into the current timeframes now for Costco, this is when I'm very heavy on. I have a main support at 541, but that's also almost a $20 drop to the downside. What can I find in between on the smaller time frames? Costco had a zone forming on the 30-minute or the 15, whichever you want to look at this on, almost the same support and the same resistance before it broke out. So could these two levels play into effect at roughly 555 a share and a support at roughly 551 a share? Could these come into effect? So going off of Costco in the smaller picture, we have a main resistance. Obviously, you guys can see on the smaller picture now at almost $562 a share. If we break above, this continuation will continue. Obviously, the word speaks for itself. Taking it down to the smaller picture, pullbacks to 555 have to hold as support since that acted as a resistance for almost 3 days back to back. Underneath that resistance, if we break under and can't go back above it, we have another support at $551 a share. These are the only levels I personally would watch on Costco. Main resistance, 561 to 562. First support at almost $555 a share. Next support at roughly $551 a share. So now moving on to CRM. I'm going to go to the larger picture on the weekly. So we're still trying to push higher. We have not touched the all-time high from what I see. And we have a massive zone that we talked about last week at roughly $220 a share, 219.8 area. I'm going to go down to the daily time frame now, just to show you guys this on a smaller picture to get the bigger idea of more candles, since every weekly candle obviously has 5 daily candles within that. You see how we tried to break above and couldn't. We had a few wicks, a few candles try to show that strength of buying pressure, but it could not hold above. Now that CRM is above that level, a pullback, I think, is necessary. That's the lowest risk that you want to wait for. Yes, I understand it's almost a $8 drop, $9 drop. That would be a nice dip buy. If you don't want to wait for the dip, this is when you take it down to the 1 hour, the 2 hour, find a zone on the smaller picture. Where could I find a better entry if I don't want to wait for that $219, $220 a share support? That is personally what I would wait for. But if you want a better support to watch, notice where it's currently sitting. It's trying to hold an area here. It's not very strong, but if you don't want to risk not having that $220 a share drop to buy calls, watch to see how $226 a share holds support as it pulls back a little bit. Watch that 226 area. If that does fail, I truly believe we could fill the gap down to 220 a share on CRM. If we have buying pressure, obviously you can use the high from Wednesday on CRM. Roughly $238 a share will be a reject if it does push that high. If 238 a share does break on the upside, that is when more continuation will happen. The breakout to fill the gap, possibly at 245, maybe even push up to 250 a share. There's so much possibility with this right now, but it has been moving on the upside. I would wait for a pullback to see how support holds at roughly 220 on CRM. So moving over to Carvana now. This has been a massive stock that people are watching. Come on, go away. There we go. This has been a stock that many people have been watching only because it's having that breakout finally. The bigger picture is having the move that people have been waiting for. And as of right now, like we talked about last week, I told you guys, watch out for that reject around $57 a share. We charted this on TradingView, so I don't have those levels on Webull, but notice how it's almost a dead set image. It's like a snipe shot. Hit that level historically where we couldn't break above, it came right back down. So now it's the effect of what levels do I need to look for? What level do I have to wait for? If you're using the smaller frames, you can put a nice support at roughly $40 to $41 a share. Just like CRM, if you don't want to wait for that level, see what you can find historically from the last reject that we had at that level. Is there a better entry point? Is there a better support you could find if you don't have too much patience? And just going off what we see, we can use levels within here, these wicks we have on the downside. Buying pressure, tried to break out but rejected massive. It tried to hold that level again, but there was not enough buyers present. The very next day, tried to push back up around 48.7, 48.5. It's never to a decimal. I like the chart. That's why I call it zones. Anywhere in the zone between, I'd say $48 a share and 48.5, there is a possible zone there in the current time frames. So I'm going to make that color orange, and I'm going to go back to current price action. We're currently under that area. So realizing that, when I switch to the 30-minute, this is going to be a possible push to reject again. If we break above 48.5, it could hold as support. When that resistance to support does flip, that's when I'm focused on. Break above, pull back to buy calls if this level can hold as a support. That's what I'm focused on. If you are in tune to buy the breakout, be my guest, but realize what has happened historically twice now in that $62 share area. Carvana can squeeze, it can move out of buyers. So it's never going to be like, oh, follow the levels, it's going to lead you that way. Carvana is one of those stocks that moves how it wants to. Watch the support on a pullback to roughly $41 a share. That is the safest bet if you want to buy calls on this position. So now moving over to Chevron, CVX. I'm going to switch this to the daily real quick just for the ones to see where it's sitting. The all-time high is not there, but it's trying to hold a massive support, which I'll take down to the 4-hour to show you guys. Notice this area, it gets bought up every time. And now we're slowly going back to the same reject with resistance. We're pushing back up. We talked about Chevron last week, or maybe even a few weeks before that. People had me chart it, and I sent it in the Discord on Webull, so I do have the levels for that. Realize where we currently are on Chevron. The in-between zones. When I talk to you guys about this, this is a heavy pinpoint as the understanding, like the inside gap rejects. We have the main top out around 160 a share. We have the main support at the bottom. It's very chop, but you understand it's roughly 152 to 153 area. The in-between is what people tend to really forget about, not realizing we have rejected this level multiple times before being able to break above it. And when we do break above it, it usually can't hold support when it pulls back. We're currently at that 158.7, 159 a share area on Chevron. So if we can't break above, we're more than likely going to fill the gap back down to 155 a share. If we do break above, we could hit the tap out once again around 160 a share. But if buyers step in and we do break above that 160, I'm going back to the 4-hour now, we could fill the gap to where we had heavy consolidation historically. Roughly 165 a share could be filled if 160 breaks on the upside. So now moving on to Disney. We have about, it looks like 13 left, 12 stocks left. I'm going to finish with SPY, just so you guys know. And I'm going to obviously skip over that when we get to the alphabetical order of it. And I want to obviously speak on this now. I'm not going to be charting ES only because ES is basically the same as the S&P, also SPY with the same movements. Price action is different based off the quantities of the cost of them. But I want you guys to realize if you can chart SPX or SPY, it all correlates basically with the same patterns. So I can send charts in the Discord on ES after the class, but I don't want to switch to another application to chart that for you. And I'm not going to be charting SPX only because that's what Rippy God uses for his levels and his technical analysis. I will be doing SPY to close the class though. So going off of Disney, I'm starting on the daily chart just so you guys can understand where it's sitting right now. Notice how Disney is one of the few stocks that is at lows based off seeing Amazon, Apple, what else have we looked at? Chevron, all other stocks. Yes, I get their different sectors, but realize where Disney's at right now. Kind of interesting, I would say, in my personal opinion. So taking this down to the 1 hour, I'm actually going to go back a little bit to see more. Okay, let's go 4 hour for now. Focus on that white highlight I have on the bottom. We come down here, we chop. It gets bought up though. It may take a few days, maybe a week or two. Buyers step in. Look where we currently are. This is when pinpointing and waiting for the right volume to come in, waiting for the correct levels to break on the upside to give you more of a like conviction idea as to if I buy calls, it has to be with time, because we may not just move on the upside as levels break. It may take some weeks, maybe a month or so to get Disney back above to the next zones to maybe 88 a share, 90 a share, 94 a share. So the comprehension of this chop is normal. Yes, we can flush, we can still break underneath 85 a share, but it's trying to hold value right now. Buyers are trying to keep it up. So understanding that, going to the 1 hour for Disney, I'm going to start taking away these highlights so it's not as confusion for you guys. Notice this support right here. It's not a pinpoint like, oh, 0.84, 0.94. Around 88 a share, 87.8. In that zone, it acted as a massive support. We're currently trying to break back above that. If Disney can break above that 88 a share, 87.9 area, and it holds on a pullback, or if it just breaks above with volume, this can push and fill the first gap to roughly 91 a share. Notice that. It's the gap zone fill game. Break on one, fill to the next level. If it wicks above, or like going back historically to this area, notice how when it breaks, it tends to pull back and show buyers stepping in to keep it above. It's a fake out. This doesn't happen because, oh, sellers stepped in. No, these hedge funds, these market makers, whatever you want to call them, they understand we're watching these key levels. It's not to a pinpoint decimal, but just the zone. This is what they know we're watching as retail. So you can't just force a play out of, oh, we broke above, I got to get calls. This could break above, pull back. So you have to be patient with your entry. The main resistance, roughly $88 a share. If we break 88 and have volume, have buying pressure, I can see us filling the gap to roughly 91 a share on Disney. No time frame as to how long that will take, but that will be the play when that happens. So moving down to DraftKings now. I'm going to the daily first, just to show you guys it's having that curl. I watch DraftKings pretty often, so I know where it's sitting, but notice that continuation. I have a level at roughly $30 a share. It acted as a resistance, pulled back. We've never touched it since. Now we're above that level. So understanding that zone held support once we broke above, and it's ran before. So we have a main level. The gap fill purpose of DraftKings at this point now. Come on. There we go. I'm going to take this down to the smaller picture in a second just to show you guys. So I'm on the 2 hour right now, just to like give you that visual. Notice how every time it pulls back, buyers step in, but we have not broken out of the resistance on this almost, what is it, week and a half, almost a week straight of a resistance at roughly 31.6 area, $32 a share. We can't break and hold above. So comprehending that, what's going to happen if we drop underneath that support at roughly $30 a share? We may fill the gap back down I'm going to switch back to the 4-hour to where these used to project at roughly 26.7 to $27 a share. That's going to be the pullback. Understanding that is huge, because if you're trying to buy calls here expecting, oh, bull flag breakout, we need above roughly 32 a share before we see that continuation of $35. DraftKings is still bullish. Earnings is approaching for it, but realize the run has been going on. Is it worth the risk to buy calls? If you do size light, add time. Realize if you're trying to get in, the main support hold you want to try and enter around is around $30 a share on a pullback. That's your best entry for calls for low risk, high reward. If you're waiting for a breakout, wait for the break above that 31.6 to $32. See if it can hold support, and then let your calls with the momentum carry you to that green trade. So now switching over to GFAI. Never charted this before, so we're going straight to the larger picture. This is a small cap penny stock, and it's currently basically trying to bounce off lows. So this will be a quick little look at for me. So seeing a zone right here on the 4-hour, we've rejected this, tried to break above and hold. When we did break above last time, we held this as a support zone on the pullback. So roughly $8.50 is going to have an effect on this stock. And that's kind of where it's at right now in the moment, trying to break above and hold. So that's kind of the only zone that I see. If we can break and hold $8.50, it should have that continuation on the run up. If we break under, use the smaller time frames as the levels, and it's roughly $7.80. So we have the only support. If we break under that, I could see a pullback to roughly $6.90 a share. That's the flush level if it does break under there. For calls, I would look orders to buy shares. A break and hold above $8.50. Watch out for that Friday tap out at $9.90. That could be a possible reject. So now moving on to INTC, which is Intel. Like always, I'm on the daily to see the bigger picture. And we're trying to break out of a level that I've charted with you guys around 34.3 a share, which held as a support historically before breaking under. And now we're trying to break back above that. We're zoning between $31.60 as a support, and then a resistance around $34.20. So we're in an area of indecision, trying to break out on the upside, trying to hold support when we pull back. If you want levels on the smaller picture, notice right here, pullbacks get eaten up. Pullback, buyer step in, reject on the resistance. Pullback, buyer step in, trying to break out of that 34.2, but it can't have that momentum. So we're still zoning. If you're looking for calls on Intel, personally, I would wait for roughly $33 a share for another pullback or a break above 34.2, and watch that hold support before you just blindly enter on a breakout. We've had a breakout before, comes up, comes right back down. So don't risk a breakout entry. See if we break above, pull back to the support, and we hold buyers here to keep that momentum flushing to the upside instead of flushing us back underneath again. Moving over to IWM, which I believe is the Russell 2000 ETF. I'm on the daily to show you guys this real quick. I've been watching this very closely, so I know we are at a nice rejection zone on the bigger picture. Basically a triple top. Now we're pulling back. Going off historical reasoning, a pullback's necessary. It's never been able to keep momentum to the upside when it does pull back. So could this be like the third time's the charm type situation? If we do catch a pullback, we have a few levels to look at. Roughly around where we're holding now at almost 193.7, 194 a share. If we break under that, I do expect a pullback to roughly 189 a share area. That is my personal buy to get calls. I'm very patient. I will wait as long as I need to. If we do flush under 193 and we don't touch 189 a share, I would not buy calls for my personal preference. I want to see that gap fill to the downside to limit my trades and force trades that I do have on positions. Then I want to catch that bounce. That is what I'm personally looking for. If I come back to use that orange level, notice how we rejected that a few times in that zone. It wasn't a pinpoint, but around 189 a share, we've had somewhat of a rejection area. So if we catch that pullback, if we hold support there, that is where I want to try and get my calls. If we break out of that triple top at roughly 198 a share and we hold above on a pullback, That's my second idea for an entry on calls if I don't want to chase the breakout. So those are my two situations with IWM. So now moving over to Johnson & Johnson, and we're almost through the rest of these. We got about, looks like 8 or 9 stocks left. So Johnson & Johnson, healthcare has been hot for you guys that do not know. Possible sector rotation is hitting. Tech slowing down, healthcare is starting to heat up. We just have to wait and see. At the current area that Johnson & Johnson is in, we've tapped out here before. And these areas I just put the highlight in. Outside of the rejects, we actually have one back here as well, if I would have scrolled back sooner. So this zone has price action reasoning of a reject or support when we get above that level. We've tried to hold support a few times once we break above that price action. A lot of consolidation and chop when it's indecisive, up, down, in between. But the actual area shows a resemblance for rejections or just supports when it pulls back. So this level around 171 a share, it gives us a reasoning to have it there. It's not a pinpoint 171.31, but just this area between 171 a share and possibly 172 a share. That is going to act as a zone of possible chop or rejection if price action is approaching it to the upside. So going down to the 30-minute now for Johnson & Johnson, we're approaching that 171 area. Could we pull back? If we do pull back, just on the 4-hour, we have a massive retrace that has to happen to almost 166 a share. Not saying that's going to happen because healthcare has been hot, but focus on we need above 171 for that continuation. Logically, we could reject here. Not saying we're going to, but that's the ideal idea. So knowing that if we break above 171 with buying pressure, 174 to 175 a share will be covered. If we push higher, 180 a share has a lot of reject area. It's almost 179 to 180 a share will be a massive reject. So is the call entry worth it when we've already pushed roughly $9 in 2 days on Johnson & Johnson? So now moving down to NVIDIA. As you guys know, NVIDIA is at all-time highs. Going back, none of this matters. So guess what we do when nothing matters at all-time highs? We take it down to the smaller picture. All we want to see is what has been happening in the past few months, which is the 2-hour right here. This is all that matters for NVIDIA right now. So understanding that, we can find easier levels based off, this is all we need right here. So we held a rejection here. Now we're approaching that pullback. That is the previous higher high based off trends. So notice how this level's come back into play. Could we hold support on NVIDIA because of that level? If we break under, we have these zones in between that tried to break out, but it kept rejecting. So we also have another support slightly under at roughly 431 a share. So we have two key supports. Obviously, the main support is where we currently are at roughly $440 a share. If we can hold 440 a share, notice the only price action we have to work with is right here that's highlighted. This is all we have. Nothing historically can help us. This is it. So knowing that, it's a big decision. Could the continuation hit? Will buyers keep stepping in? If you want to use the smaller frames for levels in this situation, notice this higher lows that I have and then lower highs. Use these levels on the recontest to the upside. These are there for a reason. We don't just bounce there for no occurrence. Notice how this purple highlight on the bottom, I'm going to try and extend this a little bit, held support. Yes, we wicked under, but it's just the idea of the area. Look what happened Friday. Intraday push rejected that zone. Historical buyers now in the present seller pressure. Same as before on the next higher low on this trend. Pullback had buyers. Now when we contest this area, sellers are present. We have levels to AMD right now. So putting those levels in, roughly 453 a share, 454 a share, that's a rejection. Next level above, roughly 460 a share. That's the next level. I'm gonna keep that white so it correlates with the highlights. And at that point, it's basically a gap fill to the previous high. 480, 477. We have key levels. We have to hold 440 as support. First rejection on the upside, 453. Next gap fill level for rejection, 460 a share. It's that simple for stuff like this. There's no reason to go to the 4 hour, the 2 hour. Yes, you can see candles on the like less candles, more meaning, but focus on that smaller picture for situations like this. Unless 440 breaks, the only thing that matters is right here. This is it. It takes your eyes off a lot of noise. So focus on these key levels for NVIDIA. So Pfizer. And David, I see what you said with the Carvana cup and handle. It's getting that cup going. Double top could form a handle and push higher. That's a good thing. I'll go back to that in a little bit to show people that may not know what that means based off just voice. So we're looking at Pfizer now, PFE. Once again, healthcare has been hot. Pfizer's trying to curl. Couldn't make that momentum push. Just going off the 4 hour. And a lot of these wicks I don't like because it's improper price action. Notice how we broke out of this historical rejection zone. We filled the gap to the upside. We broke out. Now we're pushing to the next fill at roughly $38 a share. A dollar push to the upside may not seem like a lot, but for a $30 stock, that's almost a 3% move in a day. That's a pretty neat idea. So focus on if we fill that gap to 38.50 area, the next push that we could potentially have will lead us to the next gap fill. Taking this down to the 2 hour now. I'm actually going to go to the 4 hour to see more. All these wicks are just like invalid price action, filling pre-market after hours. Focus on the daily so the candles don't distract you if you're a new trader. Understand we're filling gaps. Meta did the same thing. Netflix did the same thing. As those drop-offs happen from earnings reports or whatever the case could be, bad news after hours, they're going to fill the gaps up to where they currently were the day before those releases happened. So obviously for Pfizer on the upside, we got roughly $38.40 area as the first tap out. And above that, if we fill the gap, we have roughly $40 a share for that next tap out level as a rejection zone.
Holy moly.
So looking at Pinterest now, I'm going to go to the weekly just to show you guys the bigger picture on it.
The fuck?
So Pinterest is trying to break out of this resistance zone we've had. Going down to the daily now. This zone historically was a rejection that we're now trying to pull back and hold as support. Anywhere in this area.
Your nails are wet.
So we're currently in that zone. I got him. You guys are good. Okay, so going off the idea now. Rejections, pull back, rejections, pull back. We're above that area. It's not a pinpoint to a decimal. I understand if you take the highest points right here, we're underneath. Focus on the majority candle tap outs right here. Multiple candles correlation to a zone. Fake out, pull back, fake out, pull back, fake out, tried to hold, pull back. We are in that area. So logically, going off price action, we should hold support here. If we hold support and push back up, that's when these levels come into play. The ones on the daily that look like just straight up wicks. So if we hold the support at roughly, I'd say $27.50, $27.60, that's going to be the support we need to hold. If we bounce off that, we have a rejection at roughly $29 a share. And obviously the previous high that rejected around $31 a share is basically the gap fill, I would say. Pinterest is very choppy. It moves slow. On the weekly, we're at a heavy zone that needs to break at some point, whether it's upside or downside. So if we get some momentum above that 31 a share, this could start the trend up to 37, 38, possibly $40 a share to the upside. So now switching over to PLTR, we are at past the time. I'm going to try and speed through these, you guys. My apologies. So going off PLTR, we've been running. Small caps have been running. The pullback level, which we've charted this multiple times, we've had as a decision around roughly $15.50 a share, 15.4. That's the pullback level. If we don't hold that support, watch the 14.45, $14.50 area. The reason I have those levels going off the daily, notice the wicks that pull back as a support, and then going off the recontest on the break under, we try to break back into / above that level around $15.40 a share. The blue level historical rejects. We try to break above, no clear indecision of strength showing, rejected back under. So using those two main levels, that's all I'd be focused on. We tried to hold support once above before, and we did hold. When we did break under, we broke back above, pullbacks held support once the price action was above that level. Main support I'd be watching is the 15.4, break under that 14.45. If you're looking for a level for the resistance, just focus on the previous tap outs, roughly $18 a share to $19 a share on PLTR. So now looking at PayPal. PayPal, main level I've been talking to you guys about, it acted as a historical support level. Now pulling back after breaking out. That level is roughly $71.50 a share. If we pull back, that is the zone I want to see hold. If we do not hold that zone, I would look for the intraday on the weekly, which I'm not going to pull that up, but inside of this chop that we've had of the uptrend of higher highs, higher lows, a pullback to roughly $69.5 to $70 a share is going to be the next support if we break 71.5 on the downside. So looking at QCOM, QCOM, I'm going to the daily just to see a bigger picture. We have charted this before from what I see now. We broke out of the trend, kind of held, and now we're trying to break to the upside more. We have a level at roughly 125.5 as a resistance, and that's currently where we are sitting just below. If we break that 125.5 a share, I do see a momentum push up to that 131 possibly. Yes, there's a lot of wicks in between at 127, 128, but I like the gap fills. It looks like when this breaks out of key levels, it moves pretty well. We broke out of the trend, had the recontest, we held, we're pushing up. Break of 125.5 should lead us into that 130. Watch the 127 as rejections along the way. So now we're at QQQ. Shout out Elson. So QQQ, aka the tech sector, ETF basically. Understand it's in the same idea as SPY, the S&P, the NASDAQ, the Dow. We're pushing overall. Tech could see a pullback. We have massive earnings this week with Microsoft, with Google, with Amazon. So it's going to have a massive effect on QQQ when those earnings are released. Going off the pullbacks on trends, I'm using historical rejects as the support pullback. So what I'm focused on is this double top we had on QQQ, which is roughly, and I'm going to move levels up since they're invalid till they break lower. Roughly $372 a share is going to be a bounce level for the QQQ. If that breaks under, I see roughly 368.5 holding. If we break underneath that 368, that's when there's a lot of chop, a lot of indecision. The main level I want to see hold and all I'm focused on is that 372 a share. If that holds and bounces, that's basically continuation to the upside again. Every healthy pullback is brought up and we push to higher highs. So the next level I would watch if 372 holds is roughly 387, 388 a share, which was the historical tap out this past week. So now we're going to be looking at Roblox. A lot of you know I've been telling you about Roblox for a while now, and we actually hit the gap fill to that $46 to $47 share tap out. Every time we pull up to that level, we reject, and we tend to never hold underneath as well. So now Roblox is free falling. We broke under the historical the resistance, which is roughly $41 to $42 a share. Now we're probably going to fill the gap down to $38 a share. If we touch 38, I personally am watching for a dip buy on calls, going off my conviction of trusting the chart from bouncing there as support historically. We're back inside this zone. Focus on the zone we're in. Don't force entry on puts. Don't force entry on calls. Let the zones fill and give you your position. Don't force entry based off, I have to get in before it's too late. Let the chart speak. You follow suit and do what it tells you. If I see 38 a share hold a support, I'll add time based off historical reasoning as to buyers tend to step in. My risk is way lower getting calls down here than calls right now saying we have to bounce. So we are on to snow, third to last. So looking at snow on the daily, I do not personally trade this a lot, so I'm only speaking off levels that I see. We just had that tap out at roughly 191 a share on snow this past week. The third time in the last about month and a half, we've tapped out at that level. Going down to the 2 hour, if we fill the gap like we have historically, we're going to pull back to roughly 168 to 169 a share on snow. That is the safe entry for calls going off what it has done when it pulls back to those levels already. If we hold the 168, 167 area, 169, watch the push back to the upside. We could easily fill that gap right back to 191, and this could be the time that we actually break out of that level. I'm not saying it will push off 168 area, 167, but that's the idea, to trust price action and let it guide you to your decision and your destination of your position entry, calls or put side. I want to see a pullback to 168, 167 area. That is my call entry for a bounce. If we do push, watch out for another rejection at roughly 191 a share. So we're finally at Tesla before moving on the SPY to close out the day. Just going off the 4 hour, I'm sure everyone here watches Tesla. I'm not going to go to the bigger picture. We're at the main zone I would talk to you guys about for a major pullback, which is roughly that 156 a share. We're currently sitting there. If we break under, watch the first pullback we had historically. And I'll put a level here so it's a visual representation. The pullback is roughly $240 a share. 240 a share area is the logical pullback for Tesla. I'm not saying it's going to happen, but that's the safe entry right now. We're at a level right now that should hold as support, but if it doesn't, we should easily fill that gap down to 240. If 256 a share, 257 holds, we have a slight rejection at 266. If 266 can break on the upside, we should fill the gap once again back up to 284 before pushing higher on Tesla. So to close out the day, and before I start talking, I will look at the Zoom and see if there's any questions. I'm going to clear all my levels on SPY to start this over with you guys. Yeah, I meant 256, not 256 on Tesla. So going off of SPY, I think that was any question. The way you chart is super clean, easy to comprehend. Yeah, I try and chart main zones. When I first, I don't want to talk right now until all this, but I'll answer more questions once we finish the recording. I try and chart main zones to take filter out of the charts. I don't want to see, like, people talk to you, too much nonsense. Get to the point. That's how I like to chart. I want to see the main areas that need my attention. I don't want to hear that little talk in between. So I'm only focused on what is going to gain my attention. That's how I chart. It's a very selfish thing because other people are like, well, you need this level. You need this level. You need the current level it closed at. I don't like all that noise. So I like the bigger picture. I like the main fills to basically lower my trades. It limits my trades every week. Less trades, more money. Less decision makings. I'm letting the charts come to me. I'm not forcing entry on anything. So just going off SPY on the 2 hour currently, I'm going to chart on the smaller frames, then pull it up on the bigger picture for you guys. The main pullback I personally want to see, I'm not saying it's going to happen, but this is what I want to see. 442 to 443 pullback, roughly a $10 drop on SPY. I would like to see happen. I'm still bullish. I'm not saying I'm bearish, but going off of the main levels I want to see a pullback on. That's the zone. So I'll put a key level here just so it's a visual. Roughly 443 a share. If we don't pull back to that level, that's when current levels come into play. So I'm going to take this down to the 30-minute on SPY. This is when my charting gets more high tech because this is the main index for the market, in my opinion. S&P, the Dow Jones, the NASDAQ, Russell 2000, however you want to look at it. We're going to be using the low from Thursday as a possible key point for Monday or Tuesday or whatever the case may be. This outdoes every tap out we had already. Held support, historically had a rejection zone, roughly 451.5 a share. That is the level I personally am going to keep right here on SPY. So understanding I have 451.5 area, where's my resistance area? A lot of chop up here. So where is a key level I can find that will basically reduce the noise? I'm going to take this down to the 15-minute now. On Friday, notice this correlation. We try to get higher highs forming. try to get higher lows forming. We broke through on the bottom. Same case scenario intraday as well on Thursday. Higher highs, higher lows, we broke through. So I understand price action is kind of repeating itself, but I don't want to take that into consideration, just trust what's going to happen. So where's the main level on both of these that had a correlation? This is when I use bottom the day before, pre-market open price, basically. It's around that area. It's not a pinpoint, but the zone around here is heavy. We have wicks pull up and reject. We have fake outs. If I take this down to the 5-minute, notice the zone. I understand you can put a level down here, but wicks and fake outs are natural to happen. Going back on historical price action, pre-market tried to hold, intraday down on the downside here, tried to hold support, pre-market highs. The day before that, we had a few tap outs before breaking out, but it couldn't hold above that level. So the zone around 454 to 455, that's a key reject if we push up. Yes, it has a ways to go, but that takes the noise out of the charting. I'm not interested in playing all this dang chop. It's not worth it for me personally. Other people can chart it, that's fine, but I like the bigger picture. I don't trade SPY, I trade S&P for scalps, but if you're looking for the main zones, main resistance I see is roughly 454.5 area. Main support as of now is roughly 451.5. If we break 451, you can put a level around here, just using like the pre-market, or you can put a level up here. You have two levels you can use for the downside to see how momentum holds with possible bounces. 450, 448 a share. If those two levels break, that's when I'm focused on the main gap fill to roughly $443 a share. If I go on to the daily chart for you guys, I just want to show this so you understand why I'm looking for a pullback. My current cursor, this is a reject we had on a massive push back in early 2022, roughly $452 to $453 a share. We're currently sitting there. So if we get that pullback to that, the 445 or 443 I was talking about, I'm going to uncover these levels now. That's when the 448 comes into play. We've had a rejection a few times. Once we broke underneath, we try to break back above that level. So this gap fill is what I'm focused on. 448 is a resistance, 443 is support. Once we break under 448, that's what I'm focused on with SPY. So just a quick recap. I'm going to go to the 4-hour to do this real quick. I would personally like to see the main pullback, which it may not happen, but this is the safety for calls, long entry on calls. 443 support on a pullback. If we pull back to 448 and bounce, that's a logical point to bounce based off the early 2022 levels. As of now, rejection zone is 454. If we break above 454 and hold that level, we will continue to trend upside to possibly 460 on SPY. Psychological level before FOMC possibly.